Welcome to another episode of Advisor Insights. I'm Jillian Kemmerer. Geopolitical uncertainty and a divisive election year in the U.S. are the hallmarks of 2024. Here to break down the range of forces that will shape markets this year is Joe Davis, president of Stonebriar Wealth Management. Joe, it's great to have you back in the studio.
Hi, Jillian. Thank you for having me. It's great to be here.
I think naturally we have to start with the elections. I know clients are asking you questions. We're getting a lot of questions as well. How will politics and the elections affect the markets this year, in your view?
Every single meeting I've had to start the year, I've been asked about the upcoming election. So it is certainly top of mind. I make the joke, we're on television, we can't be talking about politics. But in all seriousness, I like to look at a few historical facts that I think are pretty important about gauging what an election year actually means. And ultimately, it might surprise you that who is in the White House really doesn't have a major effect on markets. So if we were to go back to the year 1990, we've got 19 years of Democratic administration and 15 years of a Republican administration. Contrary to popular belief, actually, all 11 sectors of the S&P on average were higher under a Democratic president. One might think that the Republican Party is more business friendly, but we just don't see that in the data. So it's a little surprising. If you take 2008 out of the mix, though, which happened of course, under President Bush in 2008, and it was a anomaly year, it's a much more balanced story, taking out some factors like that. So just like you can't blame one party or one president on the great financial crisis, you also can't give credit to one president or one party for, say, the dot-com era, where markets completely ripped for a decade. So there's actually much more of a negligible effect with politics on the market than one might think.
That's interesting. So what should investors be watching for in an election year if it's kind of hard to predict markets versus who's in power?
Yeah, a lot of investors will try to predict what policies might get enacted, and they'll set up their portfolios in such a way before that as well. And we've seen kind of the opposite happen. And most recently, I point to oil and renewable energy as an example. So, one might think, with the passing of the Inflation Reduction Act, which pledged $369 billion to fighting climate change, one might think that renewable energy stocks would do very well. And that was under President Biden recently. Renewable energy stocks dropped 50% while he was president. And on the flip side, energy stocks did very, very well. The S&P Energy Index actually doubled. And these are macro shifts. These are macro changes that have had this lasting effect. So if we look at oil prices over the last several years, in 2 weeks after the Ukraine-Russia war started, prices increased 33% in oil. And they continue to climb. And although they're back to where they started, oil companies made a lot of money. On the flip side, if we look at renewable energy, why did renewables and green energy do so well under a Republican administration? Again, it's macro forces at play. If you're going to build a wind farm or a solar farm, you're going to have very high borrowing costs. And if you have high interest rates, which right now we do after 11 rate hikes by the Fed, it's very tough to turn a profit. But under President Trump, rates were extremely low, and these renewable energy companies were actually very successful. So again, it's another example of kind of the exact opposite happening that one might expect.
And what are some things that could go wrong in an election year?
So currently we have two candidates running for president that are not young men. President Trump, former President Trump, is 77 years old, and Joe Biden is 81 years old. So to hope that they stay in good health for the rest of the year is something I think would be very favorable for the market. Any kind of health scare could be very impactful on our economy and this market and the election cycle itself. Likewise, the market doesn't like chaos. If there's a chaotic transition of power, if the election is contested, things could very well go south, even albeit temporarily. The market is not going to respond very nicely to a chaotic election outcome. And the last thing in the near term I will say is the key date to watch is March 2nd, which is the date for a government shutdown and a budget passing. So we need to make sure, our elected officials in Congress can get an agreement made by March 2nd.
Stonebriar Wealth Management, advisors for your life.
This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process described herein will be profitable. Investors may lose all of their investments. Past performance is not indicative of current or future performance. It is not a guarantee.